Hello, hi, and welcome to the market update from 2nd to 6th of December. We're coming after a very long time of about a month. So, let's begin this video with the US Treasury 10-year Treasury bond yields. We could see that Treasury bond yields, after touching a life high of 4.5 in the last few months, have started to now ease out and are trading at 4.17% now. The Brent oil, crude oil, has been very range bound in the range of 71 to 75, and in the last week it closed at $71.05 a barrel, down by 2.59%. Gold, after reaching a high of 78 to 80,000 in the last during the month of Diwali, has seen a correction and has been stable around this rate of 76,655 by 10 grams. We could see that for the last 5 days it was trading in the same range and was up by 0.33% over the last 1 week. On the US dollar index, which has been moving up quite from 101 to 105, has been now stabilized somewhere about 105 to 106 range, and we could see in the last 5 days it was typically in this range. In the graph we can see, and it closed at a 105.97 as of now. Moving on to how the markets on the international level performed, we could see that there was a positive movement in the market. The US market was positive. Nasdaq, led by the technology stocks, was up by 3.3%, whereas the other indices were either positive or almost at the same level. The European market for the last week was positive, and the Asian market, the GIFT Nifty, ended the week on the negative, whereas the Indian market was on the positive side. We could see there another market which had gave up a negative return. That was a QS Kospi. That is that was the market for the South Korean market, because of the blunder created by their current president on declaring the martial law for 6 hours. So there was a negative sentiment from the investors there. Indian RBI policy meet happened this week, and they had the results were as follows. Policy stance remained unchanged to neutral at neutral. Sorry. Repo rate was also kept up constant. RBI has reduced the FY25 growth projection downward by 60 basis point to 6.6%. Their earlier projection for the year was 7.2%. The CPI inflation projection, on the other hand, was increased by 30 basis points to now 4.8%. This was earlier projected at 4.5%. The RBI has also decided to reduce the cash reserve ratio by 50 basis points, aligning it with the pre-pandemic levels. The CRR cut will release about 1.16 lakhs crore into the banking system in the 2 tranches in the coming months. We move to the FIIs, how the FIIs were in the week. For the week, FIIs were in a positive zone. They bought close to 11,933.59 crores. DIS was also bought 1,792.47 crore worth of equities for the month. So after 2 months of seeing a decline in FII buying, the December month started with the positive buying on the FII side. The weekly now we'll move to the weekly performance, how the Sensex, how the markets performed, and with this high strength buying from the FIIs, a lot of positive news on the election front, and we saw that the Sensex ended up positive at close to 2%, whereas Nifty Bank was also up by 2.79%. Nifty Mid Cap continued its rally at 4%. Nifty Mid Cap also was up by 4.5% for the week. Now we move to the how the valuations looks. If we look at the Nifty 50 trailing P, it has after the correction and the last week upward movement, the P has reached 22.7, which is above 2 years average and below 5 years average. The Nifty mid cap 150 trailing P is currently 43.5, close to 2 years and 5 years high. Again on the risk zone, reaching the risk zone. The Nifty small cap 100 trailing P is now at 36.1%, 36.1%, close to 2 years high and above 5 years average. If now we look at the Buffet indicator, the Buffet indicator is showing that the market is currently modestly overvalued, with its indicator showing the range of 108.6%. Now we look at the Indian bond markets. Now the game, major game is being played out in the bond market. As per there was some indication that the repo rate might be cut in. A lot of policy market thought leaders were expecting that, but definitely the RBI had some other issues to tend to. So the bond rates were not cut, but definitely it had an easing pressure on the bond prices and the yield. Easing pressure on the yields. So not the bond prices. So the yields had come down by come to 6.74%. The yield curves, if we look at in the medium to the long term, is currently flat, whereas short term yield is inverted. So that was all from my side on the market update. Do share, subscribe, and like to our channel to get continuous weekly updates. Thank you.